Hey traders, Nick here reviewing the healthcare slash biotech sector. Okay, so this is a momentum area. Fundamentally, a lot of the companies in there are good. However, they do have President Trump's foot on the neck, so to speak, because there's the looming threat that he will hit their top line hard, meaning he thinks their pricing is out of whack, and he pledged, he made it a priority. First, it was, casually mentioning it here and there, like jumping on a plane or something, but now, I think last time I heard him, he actually made a promise. He made it a top priority. Now, that doesn't mean it's going to happen. They will recover from it, but the headline is inflammatory, therefore I should heed the warning. Having said that, they have been tested hard. This is a daily chart on a daily candle on the IBB. First of all, know what you're trading. IBB, XBI, XLV, not the same. Okay, so IBB is really the go-to guy. I don't trade it a lot because I find it hard to get bid and ask, get fills on the mark, and the marks are usually, by that I mean the bid ask, it trades like a micro cap of sorts, so it's hard to get a good quote on a spread. Look at the options chain, you'll know what I mean. So they have had a resurgence of late, and then a complete crash. Well, 15%, it's a correction, and then some. And here it is back in the middle. So if you think they overshoot on the top, they overshoot on the bottom. Somewhere in the middle lies the truth, as they say. Here we are. If you look at the red-blue, this is a simple regression line. So if I draw one line, an ascending line, we're almost at it. So technically, they do have potential, but it's also a call on the whole market. Okay, so as far as where we are usually I like to look left when I'm looking at a price and see what happened before. So this was a point of contention not too long ago in January, from which they sprang. I highlighted the potential with these two white lines. That's why I don't like to delete many of my lines. Here there was potential, they lived up to it. That got them to this potential, they lived up to it, and then some. They came here, drew this line, they lost it, so they filled the potential and then some, and then here they are back to a crime scene. So if I look left, this was potential, this was a pivot point from way back in 2017 September. So this is not an easy break for the IBB. This very emphatic move, I mean, these candles are huge. These are daily candles. And then flag, consolidate above the pivot point, right? And then a little more, and then you know what? They gave it all back and then some. Support, 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 support. Boy, okay? Support, support. Well, the good thing about that is that this support floor gets thicker, bigger concrete. However, if you lose it, you end up losing big. So let me zoom out to a weekly candle to see where that plays out in time. So this is 5 years versus 1 year, what we were looking at. Each candle is 1 week. So you can tell that we thought this was highs. It's not. We thought, I remember here Jim Cramer said buy, 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 and then here said buy, buy, buy. So anyway, so here we are. These are the 4 supports I just mentioned, poke, 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 and most recent poke. So that's the floor. Let me do this while I have you. While I have you on the line, I'll extend it. Okay. So it looks like solid floor. But if it look left, remember I told you it's pivot points, I like to look left. Look at that. This was a roof from which it took 1, 2, 3, 4 weeks. And then they never looked back. They came back to it, tested it, and failed. So tested it, tested it. If they tested and failed, this could happen. So this is it. I'm evaluating risk right here, odds of success and all of that. So I have a similar situation. Let's say this had bounced here. Okay, I'm here right now. Literally here. Watch. Breakout, test, 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 bounce. Breakout, test, 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 bounce. What will happen? Okay? Live up to it or fail? In this case, they failed. That's why I said, yeah, it's good they're testing the floor, but if end up the floor takes one more test and it breaks, then they shoot lower. So here, this is how I formulate my trades. So now I know the potential upside, the potential downside, then I decide. before I jump in, I need to know what the heck is this? Okay, the IBB, what is this? Okay, so I have to look into what that is. Okay, also within context of the whole market, of course. So where we are macro is okay. People still calling for a technical revisit of the lows, but fundamentally everybody agrees that we should be okay. All right. So having said that, what is the IBB? Now the IBB is an index that represents a whole collection of stocks, right? But the problem is, first of all, the PE is about 20-ish overall, so it's not crazy. That's why I'm saying it's healthy companies that have real incomes, right? They're not cheaters. And as far as what's in it, I have to know that when I invest in the IBB, I'm investing in really 6 companies that make up 40% of it. I think it's Gilead, Biogen, Amgen, Celgene, Regeneron, and Vertex. They're about, air math, about 40% of it last time I checked. So if you don't like any of these companies or 2 or 3 of these companies, then you don't do this. But if you like all of these companies, then you do this. And you can look into individual companies and see where they're at. So if I look at BIB, which is Biogen, I like the fact that it just gave up a whole lot of money. I like the fact that it's on. So basically, I know the company is good, so I'm getting it at a discount. So I'm okay with that. Celgene, same deal, right? So it's not like they've gonna. I think Gilead had a breakout of sorts recently. Yeah. So this is how I evaluate whether the IBB is like too expensive at this point or not, or had to run too fast, too soon. I hate that, but anyway. So that's the IBB, right? I'm going to do the video about the IBB and the XLV in one shot here because they're related. Okay, the other one would be the XBI. They look kind of the same, but they're not. The XBI is kind of like the momentum guy in there, okay? It's not made up of a set of big companies. Think of it as the momentum ETF for Spider for the biotechs. It has companies like Juno, Blue, Sarepta. So the higher PE, meaning more expensive, meaning less of a value, but most of them are 2% or under as a portion of the big guys. So that's why it looks like it's trading like a momentum stock versus the other collection of that are more fundamentally driven stocks. So these run faster up and run faster down usually. So do your homework. I don't know much about biotechs and pharmaceuticals. All I know that opioids are under the foot of the whole nation as bad stocks, as opposed to, chasing the druggies, and those push them. They chase the companies that make the drug that is necessary for some people. So anyway, that's crazy. So we looked at the IBB, we looked at XVI, and the third one is the XLV. Whoops, sorry about that. XLV. And those are usually the 3 that I look at. This looks kind of like the IBB. This again is a PE of 20 or so, or so. Now this is tradable for me. That's probably going to be. I haven't looked at trading it recently, but I may jump in on this one here because the PE is about 20 overall. It's got a strong bounce, has upside potential technically. So if if you think about it like a cup and handle of sorts, but I think about it, okay, they're testing a roof, and if they break through the roof, they go. This candle is important. Look at the volume. This candle is important as a floor. So the floor is important from which they sprang. And now they're attacking the other important candle, which was the crime scene here. And if you look to the left, if you consider that 2018 was a crazy start, so say, okay, this was all wrong, right? So they're now back to the truth. Look, blue, red. That is, they say reverse to the mean, right? That's the regression line. So there's a visual representation of that. So if I'm long it, I'm staying long it. If I want to go long it, I can do a debit call spread. But more importantly, I can also do a credit put spread. Why? Because if I look into the XLV, what's inside, there's J&J, there's Pfizer, AbbVie, Merck, Amgen, United Health. So all good companies. J&J is like a cranker. How long has it been around, right? And fundamentally, how expensive is J&J? Let's look. I can't remember the PE off the top of my head. 24. So there also might be some interest stuff, because these guys pay dividends and now they've become challenged a little bit because interest is rising. So it's an alternative to buying dividend stocks, right? Because people buy these stocks sometimes just for the dividend. But if they're getting 3% here and now they're getting 2% in somewhere sure like a bond, then they'd rather be in the bond or a 10-year or something like that. So they might have some downside pressure just from that. So back to the, what was it, XLV. So inside of that, 40% are those companies I just named. So if I wanted to go long J&J, Pfizer, AbbVie, Merck, and Amgen, and UNH, which I believe, if not all of them, most of them are like J&J at a dip, then I can throw a blanket over them and trade the XLV just for that. How do I do that? I would go into a debit call spread or a credit put spread in it. I'm saying this before knowing what kind of setups are available. So timing wise, these are the option chains. Hopefully you can see that. March is 19 days. If I'm buying spreads, I do not want to mess around with the first 2, 5, 12 days. The 19 days, the March contract, maybe, but why not pick another week or so? This will give me, look at that, there's 50-cent increments, so very tradable, and not very liquid though. There's not a lot of volume in it, but hey, a trade's a trade if you can set your risk right. And if you want to throw a blanket and go away for a vacation, I'd go out in time. I can get 60 cents, 50 cents, 60 cents for a $66 level. Let's go see where that is. Okay. Well, okay, so we'll go to weekly candles. So this is 5 years-ish. Let's see here, 5 years. There we go. Here. So somebody's going to pay me if this quote is correct. Let me see here, Mark. What did I say, 60 level? Let's go 64 level, 65. 56 cents. Let's call it 50 cents at 65. So right here. This was a floor tested. What is that? Okay, flash crash. So I'm willing to own it. Own shares in XLV, which means I'm owning shares in J&J, UNH, Pfizer, AbbVie, Merck, Amgen at 65. I sell that put, I collect 50 cents. So what does that mean? It means I collect money now for the privilege of buying XLV shares if they fall more than 23%. My break even is 50 cents below that, or 60 cents, whichever I end up collecting. And if I can't bear that risk, I'll do a spread, credit put spread, a little bit higher. I'll step up to here. So I can use that money to buy debit call spread if I want to participate in more upside, or I just want time to die. And that's all I want. I'm basically creating dividends out of the stock without even this ticker, without even owning it. Okay, so this is how I could trade. This same logic transfers to all of them. So Celgene. All right, so here's Celgene at a major. As I tell you, I like to look left. This is perfect. Look left. Okay, this is where we are right now. These are weekly candles, 5 years. Okay, look left. Major battle zone. Major. Boom. Emphatic move on earnings. So they said something. They said, you know what? We had completely mispriced this bad boy. Let's go. Bulls. Bears pushed them back. Look at that. Lower highs bouncing on the floorboard. They spent a lot of time here. This is 2016. This was the bottom. Remember 2016, 212, when everybody said, wait a minute, the market's completely mispriced. Let's go. Okay, so these guys didn't go right away, but defended. This major test. Look at these candles. Look at the volume. Look left. There's nothing even close to it. So this is legit. And then now we're below it. We're not going to be able to break above it that easily. However, what it's telling me is this is a solid floor that it will take another major headline for it to get lost. But this tells me there's risk. What if it gets lost? It's been lost almost kind of already, right? And now the onus is on the bulls to show that this is not going to be forward resistance, because it was support. If it is resistance, then 70 is totally possible. Okay, so let's go. What was that? Celgene? God, my memory's going. Oh, now I can't remember the ticker. Embarrassment. Okay, so Celgene. I'd have to look as to when they do earnings, and if I'm selling risk, I want to avoid the earnings. Why? Because VIX is already high. I don't need the extra juice, and I just want time to die. If I don't want to avoid earnings, then I go out in time. So I'm going to go again to September. 70, I get $1 right here. You see that mark? This is September, 200 days. I get $1 for 70. So let me show you the risk. So it is at 95-ish. 70 is 25% lower than current price. Okay, so I'm basically, if I sell that put at $70 for Celgene, I'm committing to buying it at $70 if it falls through it in the next 200 days. So if we have another correction and it falls to 69, I have to buy it at 70, and I'm even because I collected $1. So 69 is my break-even point. Below 69, I accrue losses just like owning shares, but from here, not from here. So if somebody bought the shares here to go along, they would suffer $20, $25 per share. Me selling on the same day, they buy the shares, I sell the puts. I haven't lost anything yet. Below 69, I start losing. So if it goes to 60, I lost $9 a share, a contract. Sorry, each contract is 100 shares. They lost 25 plus 9. Okay, so this is the pros and cons of buying the actual shares versus using the options to take a risk. Now there is a way of buying shares by buying calls or call spreads. Buying shares will kind of be better because from the perspective that you're buying an asset, whereas the other one you're just kind of renting an asset, you're buying a bet on the asset, and if price goes against you, then it disappears. the rental price goes away. But when I'm selling puts, it's not the same. I'm actually doing the selling. So somebody is buying hope that it would fall to 70. And I'm saying, I did my homework. It's not going to fall to 70. And if it does fall to 70, I don't care. I'll take the shares from you. So they're holding that lottery ticket, and time is working against them. Time is working for me. Now, VIX is high. Let's say VIX collapses in the next couple of weeks. All else held equal, that dollar would collapse, because the VIX is juicy right now, causing all options prices to be elevated. That's why I'm not a favor of buying puts and calls at this point in time without selling against them. Okay, so selling is better in this case. It is riskier, but hey, that's the point of selling, is do your homework and see, okay, you know what, this is a good spot to buy it, but look, this is an even better spot to buy it. Fundamentals, important, right? So let's see what kind of fundamentals it has. Again, ignore this garbage. 18, price to earnings, trailing 12 months, TTM. Hey, sign me up. 18. So let's look at it from multiple time frames perspective. This is a 1 year. This is 1 week, what we were looking at. This is 1 month. So you can see 70 in the last, God, I don't know, since 2000 is right here. Would you? I would be. I'm brave enough to own it down there. Okay, market crash aside, I'm brave enough to do it. All right. So this was Celgene. This was really IBB, XBI, XLV, Celgene. I bet you I can say the exact same words about J&J, only a better trend. So if you love J&J more, then did we do this already? Sorry if we did. 25. Yeah, it sounds not deja vu now. So yeah, it's a little more expensive PE, but it looks like it has a better trend, so you get what you pay for. It all depends on personal preference. Do the homework and choose the level of risk and what to risk it on. All right, Nick signing out. That was a long video, but it covered a whole bunch of tickets. In fact, it covered a whole segment. These are momentum. And again, keep in mind that President Trump vowed to the pharma, he calls it. So pharma is in his line of sight. So determine which of these stocks is really pharma and see if you can avoid them. All right, Nick signing out.